Welcome back to Market on Close. We have more earnings to dive into. Let's welcome in George Tsilis, senior markets correspondent, to discuss Hims and Hers. Shares of Hims and Hers actually closed up ahead of these results, up about 2.6% today, bucking the overall downtrend of the market. But looks like Hims and Hers could be giving back some of those gains, George, following these results. Looks pretty good in terms of top and bottom line, but maybe current quarter guidance is what has investors downbeat here.
It is. It's a little bit of a mixed bag here, at least on the top line for the business. I mean, it's been growing pretty exceptionally well, considering it's becoming more of a brand for personal wellness and healthcare, everything from telehealth to healthcare and vanity products. But, looking at the numbers overall, they actually were quite good. They bested the EPS estimates, which were 12 cents a share. They came in at 20. And that was a threefold increase compared to 5 cents last year. So they keep moving in the right direction. From a profit standpoint on an adjusted basis, if you look at sales, they also came in ahead of estimates, beating the number, it looks like by 30 million at 568 million versus 538. And that was over 110% compared to the same quarter last year where they had generated 278 million. So this is certainly a growth story for Hims and Hers from the standpoint of popular trends and utilization rates. I think if you look at the guidance, that seems to be where the little bit of a hang-up is. And it's not necessarily the full year, but they did guide for the full year in terms of guidance. It was around $2.32 in terms of the guidance. Now it's 2.35. This is for the sales, forgive me. 2.32 billion was the estimate. Came in around 2.35 billion for the full year in terms of sales. But next quarter looks like there's a little bit of a slowdown as projected by the company from 564 million at the midpoint down to 540 at the midpoint. So with that said, you are seeing a little bit of a sell-off, but it is catching a slight bid considering that the company itself has become quite profitable over the years. Gross margins over 80%, so it's a very asset-light model in the past four quarters. And net income margin is close to 10% and growing. But at the same time, there are some questions about valuations for this name, considering outside of today's changes, which will come about from an EPS standpoint, it's still trading around 63 times this year's earnings. This is based upon the earnings estimates at the close, which again will probably be adjusted slightly to the upside as we move along.
Yeah, and of course, it just recently announced that partnership with Novo Nordisk to offer popular weight loss drug Wegovy on its platform. We'll see what it has to say about that in terms of any potential financial impact there. But I will say I did see a downgrade from TD Cowen not too long ago because they don't really see that many other catalysts from here. They said they like the story in the longer term, but they're moving to the sidelines as near-term upside may be limited. And it seems like that's what the majority of analysts are thinking, because 60% are in the hold camp and the median price target's $38, which is below where it closed today. So it doesn't seem like analysts are on board at this point.
No, and the reason being is valuation. It's still valued quite richly based on this year's and next year's earnings. But by all means, the company is growing. It's growing its profits and its sales. But, that may not necessarily be enough to offset the valuation compression. So this may be a situation where even after a good report, we do see some selling, and that's based upon also maybe earnings estimates rise slightly. So that's just a classic multiple compression where we see prices fall and earnings rise or estimates rise to get it closer to maybe fair value in terms of its growth rate going forward. So it's going to be quarter to quarter, but overall, if you even look at it year to date, performance-wise, it's still higher by quite a bit, 70 or so percent, even over the last year, 230%. So maybe a little bit long in the tooth in terms of the price action, and perhaps a potential pullback and a reset is inevitable. But just keep in mind, like I said, they've been growing their profits and sales quite generously. So that's going to offset some of the valuation multiples, which are still relatively rich right now.
Okay. All right. Let's see if they can say anything on the call that reignites investors' optimism here. George Tsilis, thanks so much.